Every deal we've done, we used other people's money. I can't think of a single deal we did where we didn't have a partner with capital. So in the beginning, we used a Roth IRA I had accumulated from a TSP, a thrift savings plan in the military. So that rolled over.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella's story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Go back to Capital Hacking. What's up, John? What do you think?
Oh, what a day. What a morning. This was such a great interview with Chris Levarek from Valkyrie Investment Group, and he dropped some bombs. Josh did an amazing job today talking about the Reg D. A lot of people have questions about what that means and all these different numbers, and Josh schools everybody on a 506B, a 506C, and we learn about a new one, which was a 504. It's not new, but it was new.
Yeah, he was even saying, don't even remember it. He's like, ignore that one. But for those of you who are driving, I know, you probably already bought that Tesla, which, by the way, I heard just went on sale. You don't even have to drive anymore. So just grab your pen and paper. We're going to do a few real dives. They're not the deepest dives, but they're real dives. And then we're going to talk about this gentleman's journey. Not only does he eventually join us to the GoBundance group, but he starts with the duplexes. He starts with the single families. He gets into multifamily. And then he schools us on Airbnb and short-term rental. So that's like a little trophy, a little cherry inside the show that he's going to give you about 2 or 3 tidbits. If that's something that's on your radar, you might want to hear that.
Yeah, really, really strong information that you can implement immediately if you're thinking about a VRBO, an STR. So yeah, get your pens and papers ready and let's rock.
And I want to say this before we run into the show. The show has some, at the end, we get to really opine and correlate our heart on something that's very important. So there's a lady out there that Melanie and I found. Actually, we found Tyler and Lindsay Goebel first, who introduced us to Unbound Now and Suzanne Peters and her organization. And we figured out at the end of the show that Chris, his family, our family, are both contributors to this wonderful charity. So if you haven't heard about the crisis that's going on in the world with human trafficking, we at the end give you a website. If you ever want to find out more, we're both contributors to that, our two groups. And that is, by the way, in the show, I say we interviewed and had a whole conversation about this on Capital Hacking, and we forgot to say the number. So in the show, you'll find out what we're talking about, but it's episode 239. And the title of Capital Hacking that day was Flipping to Fight Human Trafficking with Tyler and Lindsay Goebel. That and unboundnow.org. Check it all out and enjoy a great episode.
Let's get after it.
Chris Levarek, welcome to the big show.
It is so exciting to have you here, Chris. Can you give us a little background of who you are and why you're on our show right now?
Awesome. Yes, thank you. Thank you for having me. So Chris Levarek, I'm in Phoenix, Arizona. I run a family investment business. I have since 2018, and we've done a lot of multifamily. We've done short-term rentals. Every deal we've done, we partnered with someone. So it's a lot about partnerships and just invested in North Carolina, Texas, Florida, Arizona. Even had one project in Ohio at one point.
Wow. So wait a second. You told us a lot in a little bit of time. That's very efficient of you. Were you in the military?
I was. Yes, sir.
Tell us about that, because what's the chronology and the story arc here for a moment? You're so to the point. You almost went so fast. Some people swerved off the road. So go back to the military, to the name of the business. It's quite a unique name. I got to learn about.
Okay, great. Yeah. So I had an interesting, I tried to get out and live life a bit. So after high school, I went and lived Europe for 2 years, actually.
Wow.
I was a bit broke, so I decided to join the military so I could travel more. Got into the Air Force. I was a firefighter, and they sent me to South Dakota. Interesting journey. So I ended up traveling to the Midwest. And after I got out of the military, went back to school in Arizona, ASU, and got an IT degree and spent 12 years as a corporate IT engineer. And then got into real estate, built a business with my family. So our wives work in the business. My brother works in the business. And yeah, we've been doing it ever since. I quit my IT career last March. So it's been fun.
So since 2018, acquiring properties in your own portfolio, it sounds like at first. Houses, I imagine, at first, right?
Duplexes. We never did houses actually originally. We did straight into multifamily.
Okay. And in that model, you have a brother. His name's Ashton, correct?
Correct.
So how do you guys split your time and share your talents?
Right. So I'd say if you read the book Traction, it's really how we launched our business on it. He was more of the visionary role and I was more of the integrator role. And that just means I did more of the detail, the operations, and he did more of the kind of big picture, dream vision, see where we can go with the business. And so he does a lot more of the marketing to that reason. So he does a lot more of the marketing, branding, relationships, and I do more of the operations of the business and keep everybody in check. So that's kind of how we did it. Yeah.
Chris, I love that your family is involved. You know, you're in business with your brother, that both of your wives are involved in the business because, you know, listen, they're vested. So their interest is in helping you guys grow. And both Josh and I, both of our wives are directly working with us in our businesses.
Awesome.
So as long as you're doing different things, it's a good thing. Sometimes we can get in each other's way, but so you started out in small multifamilies. Was that just using the income between you and your brother? Did you start out using other people's money? How did that work?
Yes. Every deal we've done, we used other people's money. Can't think of a single deal we did where we didn't have a partner with capital. So in the beginning, we used a Roth IRA I had accumulated from a TSP, a thrift savings plan in the military. So that rolled over. So together, I think we put, close to $90K in our first purchase where we bought 2 duplexes together. We did a private lender agreement. So the private lender brought 70% of the acquisition. We funded 30% plus renovations. It was an all cash purchase. And we did what's called that BRRRR strategy. So we bought it and we fixed it up and then we refinanced out the private lender, kept the deal.
So you were in IT for some time there. And what made you switch and say, hey, I want to start buying real estate? What was the thing that happened?
Yes. So 2018, surprised that they actually started raising rates then, and there was a dip in the market, just like there is now. When they raise the Fed rate, it causes the economy to go the other way. So that happened. And I remember looking at my 401k and seeing about 10K disappear pretty much within a couple weeks. And I was just like, man, I'm throwing money at this thing and someone changes a little knob and all of a sudden I lose all this money. Like, this probably won't end up very well. When I'm 67, I won't have like exactly what I think I'm going to have. Forget what a 401k does or doesn't do, but it wasn't aligning the way I saw it. So listened to a lot of podcasts, saw that a lot of people who had wealth seemed to be in real estate. So there had to be some kind of common driver there. And I decided, hey, I'm scared on my gourd, but I'm going to buy one and let's see what happens, from there. And once you do it once, it's not as scary going again. So
that's I like when sometimes we get this chance, Chris, to put ourselves in the shoes and the driver's seat of people listening to you and I and John right now. And, that probably happened to every single one of us at some point where we realize the movement of stock markets seem arbitrary sometimes. Yes, there's a little bit of news, something changes, all of a sudden, I guess it's lower. If you listen to our financial advisors out there, they would say, just don't check, right? Don't even look at your portfolio. You're not using it until you're 60 anyway, which in a way, I guess, keeps you peace of mind, right? It's kind of like the ostrich in the head in the sand. But for some reason that bothered you. And it wasn't, and as John was saying, what was it? Sounds like it was podcasts. So this journey, was Ashton doing it already, or did you push Ashton and your family into real estate?
I think we helped each other take the jump. He wasn't in there yet. He's 21 years special operations in the military. So definitely they're not teaching that kind of stuff all the time. But he does a cool story. He was deployed and sitting by, waiting for a helicopter pickup. And this guy was telling him he was buying condos and renting them out. And, he was like, what? How are you renting them out? You're a landlord? So he has his own story. But in 2018, we somehow were on that same plan, and we're very close brothers. And only got closer to the business. But at that time, we kind of had the same thinking, the same process, and started bouncing ideas off each other. But the cool thing is too, if you have a partner, if you have a brother, sometimes you might be, dragging your feet, and it helps to have that other person to kind of light the fire behind each of you and give you that initiative to take that action. So that's really what it was both of us coming together that allowed us to take action.
And we'll get off this cool stuff, but I get geeked out about some other cool things you're doing. I mean, the name Valkyrie. Yeah, man. My memory of that word Valkyrie is from the plot to kill Adolf Hitler. Do you remember that?
Yeah, it was a good movie.
Is that, and it's actually a true story, right? And one of the people connected with that movie or the story has a connection to my brother-in-law somehow. So there was a little overlap, a real heroic effort to kill Hitler early on, I believe. So it didn't work out. The guy made it. But tell me, is that where the name comes from for your company, or what does the name mean to you?
Yeah, so actually it's an anagram or a last name. If you flip the letters around, it's Levarek, all mixed up. And we just wanted to have a little fun with it. We wanted to be different. The idea was the Valkyrie being this, maiden in Viking lore and Nordish, history, where we would come rescue the fallen soldier off the battlefield and take them to Valhalla. And we kind of had this idea, hey, we're helping people invest in real estate. We're freeing you from the, your wounds or you lying hurt on the battlefield. And so we just made this up, and our logo has, Valkyrie wings in it. So it's kind of cool.
I'll dig that. I love it. Is that how your investors feel? So I know how these things, we all know how these things come up with a dream. This is what our investors are going to feel like. Well, they're going to feel like we're freeing them from Wall Street. Is that how it has matured? Is that how it is today?
Yeah, I mean, we have great reviews. I think that the whole thing is it's not even just that. It's freeing from that mentality as well as the kind of idea behind it too. So we do a lot of education. I feel like people enjoy that. I feel like people realize we're not asking for anything. We're giving a lot. We're giving a lot of information. We're making things simple for them to get involved in real estate. And so far, so good. I haven't had, someone to say, you're not living up to the name. You're not fulfilling your deal. So enjoying it.
So Chris, can you walk us through? So if you bought your first duplex in 2018, it's the beginning of 2023. Clearly you scaled quite a bit. You started a fund. Can you take us from that first duplex you had to having the idea of creating a fund? How many properties do you currently have? What does that look like for investors? Run us through that, please.
Sure. So it's an iterative process. I've worked with like 4 different security attorneys in the process before we even started the fund. It just starts slowly. So my journey was private lender partnerships, joint ventures, ownership, joint ventures into LLC ownership. Going into our first syndication was a 16 unit. I did a 504. It's not very common. Normally you hear of a 506B or 506C, different securities attorneys learning along the way. Finally, we built a fund to make our whole purpose is to make investing simple in real estate. And it just is very complex when you're having a 46-page document read by your investor every time they want to invest with you. So creating a fund, we have a 506C fund now where we do accredited investments into. Now it's a customizable fund as well, so people can select different deals when they're in the fund. And that's very cool. It makes it simple. You invest in the fund, you select the deal. You don't have to read a 60-page document per deal. It's a simple deal disclosure that's 2 pages long. And so that was the idea behind getting to this point, is make it simpler. How can we make it simpler? How will we make it so the person who's working, who has a $200K job and is busy and has a family, can invest in real estate and not have to read a dictionary every time? So that was the goal.
Yeah, John and I were sitting here writing down, what is a 504? So several of our investors here may or may not know that there's the Securities and Exchange Commission. And I'm going to give you a quick little primer, but can you answer that for us when I'm done this primer? The primer is this. When an investment, this is just a public service announcement, when an investment is relying on an operator to manage your money once you give it to them, and you're passive, the government calls that a security. Now, at the highest end, we all have thought of the Amazon stock or the Apple stock, that is a security. All the way at the smallest level, it's also the person who wants to raise $1 million to buy an 8-plex or a 10-plex. And that person's name is Jenny Smith. And Jenny Smith says, I'm pretty good at building buildings or buying buildings and fixing them. And Joe Smith and Jenny's friends, they all invest, but they give their money to Jenny. As soon as they give the money to Jenny, it's called a security. Unless they're part of the project, it's called a security. So the government says, now you're a security. Now, how does this happen all the time? out there. I mean, we've all heard a podcast that somebody said they did it. Now we're meeting Chris. He says he does it. We do it at Accountable Equity as well. But it's because you then hire an attorney. As you mentioned, Chris, they're called a SEC type of attorney that can prepare documents for the SEC. And these attorneys will prepare an exemption. This is a key thing. I was just on the phone with someone was asking us for money to become an investor. And they actually didn't know this. And I was like, oh, wait, how do you have all this and you don't understand this basic principle? Yeah. If you're asking people for money, it's not because you went through the SEC. What happens is your lawyer actually sends a letter saying, if we follow all these protocols, we will be exempt for filing with the SEC. And that's what you hear on these shows all the time. The 506, it actually starts with the word Regulation D of the SEC code. Then in the SEC code, Regulation D, then you go down and there's probably hundreds of little numbers, but then you get to 506. And this is where people can do small syndications or funds. They don't have to be small, but they have to be structured in a certain way. And you'll hear this word letter B as in boy, or you'll hear the letter C as in cat. And we don't go into this too often on the show, but we mention these things all the time. So anybody's listening is like, finally, somebody explain what the hell these are. So what they are is exemption from having to Wall Street securitize and go out and actually spend $500,000 to file with the government. You're exempt if you do 100 things. If you give these disclosures, if you have a proper signing process, if it's been reviewed by these attorneys. Now, B means, as in boy, that you do not have to validate the Eurocredit. And everybody's listening is like, why doesn't everybody do the letter B? Isn't it nicer to let your relative in who's not accredited into a small fund that you create? Yes, that would be awesome. The only challenge is the government says, if you're going to do that, you can do it if it's your brother or someone you know or a pre-existing condition, but you can't talk about it on a podcast or you can't do a 506B and try to promote it on the internet. Why? Because then you're going to attract somebody who may not be knowledgeable of you, no personal relationship with you, and maybe not aware of how to do it. You know,
That the terminology they call it sophisticated.
Yeah. So then the C class, the one that you put that little letter C there, it means that they're accredited by the government's rules, not by mine. And that means that the government's saying you have some reserves and money. Therefore, it's on you. Take the risk if you want to. Sorry, that was a deep dive.
Mm-hmm.
Now, could you tell us what a 504 is?
What's a 504?
Never heard of a 504.
Yeah, I mean, it's the same thing. It's under Reg D. Initially, when we started out, it's more of it used to be capped at $1 million. You could raise $1 million for a project. And now I think they've moved it up a bit. But it was more for really sophisticated investors only. And there were some reasons why we were pushed in that direction because we were new, I guess. And also the securities attorney we were working with wasn't exactly, let's say back then I was working with a local firm and they had a securities guy, but they weren't specialized in securities as a firm. So they pushed us in the realm of the 504 because they said, oh, well, you're probably working with family and friends. This one is going to be the one you probably won't stumble into any trouble with because it's more for new investors. It's more for small raises. And they've raised the cap now, but I wouldn't suggest anybody goes back to it. It was more popular years ago. I don't know why we did it in the beginning. So,
okay. All right. Now we got our answer. Now, House of Heroes. Could you talk about that a little bit?
Sure. So yeah, that's one of our short-term rentals. We have 5 luxury short-term rentals we actually manage. We've syndicated them all. So they were more small joint venture projects, but now we even have a fund for short-term rentals, an offering for that. So we've changed it. But in the beginning, when we did our short-term rental acquisitions, we bought one in Kissimmee, Florida. It was our first one, actually. 7 bedrooms, about 3,600 square foot, and then does about 120,000 gross a year. So really cool. It's right next to Disney World, and we like to theme them and name them and make them look cool.
How much do you want to do a deal deep dive for a moment? How much was the acquisition and how did you structure that joint venture?
Sure. So that one, when we first did it, was a debt offering. So rather than equity ownership in the syndication, we were just simply doing promissory note into the deal. And we raised about $280, I think, or $260. It was $625,000 purchase price. It was a great purchase. Don't go down there now. It's very expensive. I think a 7-bedroom right now is going for about $800,000. So, but $625, about $260 in. And then that was all private notes, really. funding that deal. And the loan was simply a vacation home loan from our end. We managed the loan, so no liability for any investors.
Very cool. And did you change the capital stack now? Did you refi it and pay everybody back?
We paid off half of it, actually, basically with our own earnings. So we've actually bought back the property itself. We
That's
haven't done a
very
refi,
smart.
yeah.
So let's just picture that. So you're saying the project itself was able to pay down the investors itself without even having to go back to a bank to get that burst strategy going. Very cool.
Right. I wish I could do more like that. So,
Well, and where is Valkyrie going in the future? Why don't you tell us more about what projects are exciting you today and why?
sure. So we've done a lot of cool stuff in the last year. Like I said, we launched the 4 or 5 vacation rental. We did 4 luxury vacation rentals last year, raised about $2 million for those. Those were all equity ownership positions. So we really got in the vacation rental space. Traditionally, we had been in the multifamily space. We still do some of those. And the idea really is to get behind the fund that we have offerings in short-term rentals and multifamily behind this 506C fund. And at the same time, if someone is not accredited, we'd love to do some other deals throughout the year, but we didn't want to just have those sophisticated deals only. And then we also created a course. So we teach vacation rental. So if someone doesn't want to be passive and they want to be active, I wanted to create something that you could take that path in the journey if you really want to. If you want to be like me and you're working a W-2 and you want to work the extra hours and have your own property, here's the guidebook. So that was a lot of fun. It took me about 4 months to put together, traveling to different short-term rentals and videoing all the content, but it's much, much cheaper and someone can do it themselves if they want to. So
That's awesome. Now, Chris, I know you recently joined GoBundance about 4 years ago. Can you tell us how you found out about GoBundance? Josh and I are veterans, so welcome to the brotherhood here, but how you found it and how you've enjoyed it so far.
thank you. Yes, it's been, so I'll say this, for me and my brother, we've been really resistant to taking mentorships, joining masterminds. We wanted to do it ourselves. And something you learn along the way is something you learn in the journey is you can do that. You're going to collect a lot of bumps and bruises, but eventually you'll hit a ceiling, and it's usually a ceiling you place on yourself because you only know what you know. And joining into a group like Abundance, all of a sudden that ceiling gets kind of blown off because you see, well, I'm kind of a small guy. Or, these guys are doing this crazy stuff over here with car washes. What's that? I don't know. Like you start to see these other aspects and even other areas of life. People are sharing about their families, sharing about trips, sharing about relationships. And you just start to like have your whole world kind of expanded. And you're able to see that maybe there's a lot of areas you can improve, not just in business, but you can grow by seeing these other examples. That's really what I was looking for. It took me like a lot of, self-searching to realize like, hey man, digest this. You're not at the best you can be. Let's see what else is out there. And when I made that choice, that's when I joined GoBundance. It took me a little bit though.
Yeah, I think a lot of us men struggle with that, especially where it comes to like, hey, we're doing pretty well in business and that's just another thing of guys. And I don't need that. That's great for that person. But man, it's funny. I say it frequently that if you want to go fast, go alone. If you want to go far, go together. And what you just said was like, yeah, car washes. You don't really think about that, or laundromats, or all these different spaces that dudes are in that are just absolutely crushing it. Like you're talking about, luxury vacation, like short-term rentals in that space. Well, Josh and I recently interviewed a guy who's a GoBro, Mark Kuhn, who's doing luxury storage units. Who thinks about that? Luxury storage units. He's building this huge like cement pad in the Midwest and putting these things in. And it's, wow. Yeah, it is wild. Now you host along with your brother a podcast called Art of Winning. What do you guys talk about?
So that's actually mainly my brother. I let him run with that. I don't, I've been a guest a couple times, but he hosts that by himself. And the cool thing about that, we didn't want to just do a real estate podcast. So the idea was, how do you become the best version of yourself in all areas? Kind of like GoBundance, but a lot of it is health. A lot of it is wealth and mindset and in thinking a certain way. So he has a lot of really cool, like doctors and nutritionists and real estate investors and like just this whole wealth. He does a lot, of course, special op guys come on. So he'll be talking with like SEALs and these different guys talking about what the things they're thinking about to get through certain programs or through war. And the whole idea behind the podcast was, improving a version of yourself, improving who you are. So in multiple facets. It's a cool podcast.
That's awesome. And so many of our friends are veterans that are involved in GoBundance, and we appreciate your service so much. And, we are in debt to all of you. Has he had Eric Upchurch on, because he's a pretty savage dude who runs Active Duty Passive Income, which is a podcast. But he's somebody you want to think about for that.
Definitely. We've had a few. I think Eric might be scheduled. I don't remember, but we did like Brian Briscoe and some of the other guys that are in the military space. So yeah, definitely we'll get him on. He's not.
Well, as we're teaching here, before we let you go, I want to ask you to teach us a little bit about short-term rent. Give us a primer, because, this shows up so often in all of our lives. Like people say, I'm a specialist in multifamily, but I'd like to own a few short-term rentals. And if you could just give us a little bit of the training, or at least the categories of the training, what's in your course? So what should we know before we try to invest in short-term rentals?
Sure. I'd say it's very similar to multifamily if we want to put the framework that I put together in the course, but you pick the market, and the market's really dependent on maybe a little different. You're looking at data from AirDNA to see if a market is good or not. So AirDNA is a tool you can go use for free and look and see, well, how are the occupancy? What's this property going to earn? You can look up all that for free with AirDNA. And then, so you pick your market, build a team, much like multifamily. You're going to build that agent to help you get the property. You're going to check out the different handyman contractors, build a team. To underwrite it, you're just going to look at other listings, see how they're doing, get the data from AirDNA, and make sure that it's hitting a certain type of return for you. It's a nightly stay, so it's not a 12-month stay, but it's the same thing as multifamily. You're looking to see if it's hitting your numbers. Is it delivering 15 to 20% cash on cash over the year? Then yes, I pull the trigger. And then you go into, renovating it, furnishing it, picking out the different costs. You're going to add those up, make sure it fits in your budget for furnishing a house. That's a big difference between multifamily. You've got a furnishing budget now. You got furniture you need to buy. And then listing it. You're putting it on Airbnb. You're putting it on VRBO. And you are making it look good. Professional pictures, pricing it according to competitors, using tools like Guest D and Price Labs, which are automation tools. They're great. They help your listing. And then, you're just going to manage it with those automation tools. I mean, that's really the course in like a quick bunched up version. But I would say if I was going to give a free nugget, if you're interested in short-term rentals, go to AirDNA. There's a tool called Rentalizer, and you can literally enter an address in that tool. You'll see it in the menu. It says Rentalizer. Click it, enter your address of a property you're looking at, and it'll spit out, here's what we think this will earn. And they're doing it based on all the listings that they look at and all the Airbnbs listed. So they're grabbing all that data. So you'll have a general guideline of like, hey, 315 Mockingbird, it can earn this much if it has this much occupancy. And according to the comps, it looks like this could work. So really quick tip.
I love that.
That was awesome, Chris. Thank you. That's what we're talking about, where you're giving our listeners tangible things that they can literally, implement immediately.
Yeah.
Definitely.
And, early in the show, again, I just love some of this advice you're offering. Earlier in the show, you mentioned that everything you do today and always have has been through partnership. And when you said that at first, I thought it meant like you have operational partners. But then I thought, well, did he mean financial partners? Of course you have financial partners.
Did we?
But is your strategy find operational partners as well? What is your basic philosophy? Do you manage, when you find a multifamily deal, are you the lead sponsor or a co-sponsor?
Great question. I don't think you can go into a big project and do it all yourself. So small projects we partnered on, but as we scaled our first 84 unit multifamily, we were co-sponsor. We raised equity for it. We helped manage it, but we weren't on the ground doing the turns anymore. We weren't having those weekly calls with the property manager. We shifted into raising equity because it seemed an area where it allowed us to do other things in our business and we didn't have to focus only on managing the property. So typically we raise equity. That's how we got into the fund space. We're more of the fund manager now. We raise equity for deals. But interesting enough, the short-term rentals, we manage ourselves. So I have a Vacations by Valkyrie is our property management for short-term rentals. And we have Filipino VAs and that kind of stuff that help with inquiries and that kind of stuff. So that's the single area we keep close to home.
And what is a typical year in capital? What kind of capital do you usually place or bring in each year?
Yeah, so last year we raised about $6 million. Mainly what slowed us down, and I'll say this is why you partner. What slowed us down was getting all the loans, acquiring the short-term rentals ourselves, managing, furnishing them, and then, renting them out. Like, you kind of have to pick what area of your business you're going to do and what area you're going to grow into. So slowing us down on the capital raise was managing short-term rentals and building them up. So it's a trade-off.
You've done a lot of great things. And one of the other things I noticed, obviously, we have a lot of mutual friends. Brandon Hall, it seems like he's part of your team. Great CPA. Anybody's looking for that advanced IRA, I got to learn more about them later. But KKOS, we've had them on the show. Yeah. The team there with, actually, who did we have on one of the guys who does a lot of their advice on finance, what do you call legal structuring of deals. But my favorite thing I have in common with you ready?
Let's do it.
Unbound, that fights human trafficking. Melanie and I have been donors there now for almost a year, I hope, if not long. Well, I guess just under a year. Big fans of this organization, led by wonderful people fighting human trafficking. How did you find out about Unbound? And anybody who's listening, we'll give you the link here in a second.
Yeah, so a cool thing we like to do, we call that impact investing. We have a donor-advised fund that we then take profits from our syndications, throw it in the donor-advised fund, and donate to charities. So Unbound is one of those. It's a great program. There's a lot of guys in our network, and one of them is ex-Marine. I believe he's down in Texas, and he's big on Unbound, and we connected with him.
Is he gosh, I think he might have been on the show. You happen to remember his name?
Gosh, now you put me on the spot.
I know, put you on the spot. But we've had him and his wife on the show. And they talked about flipping to fight human trafficking.
That's
was one
the
of our
guy.
episodes.
Yeah.
All right. We'll get that episode in the intro. But for those of you who want to donate to fight human trafficking, please join all of us on this call and hit Unbound now. So just put Unbound and then now.org. Crazy epidemic of human slavery in modern era. It's who knew? If you don't know, you will be shocked when you find out that it's the largest time, percentage-wise, of human trafficking ever in human civilization is now. And we wouldn't think that. Human slavery. It's here right now. We got to fight it. I appreciate everything you've done, man.
Yeah, Chris, thank you so much for sharing on our show today. And thank you for all that you're doing, not just in investing, but also helping the world here in different charities. How do people come and find you?
Yeah, you can go to our website, valkyriegroup.com. Easiest way. If you want to check out the course, it's vacationrentalmaster.com. So vacationrentalmaster.com.
Good URL.
And you can go to our main website, valkyriegroup.com, to find everything, though. So,
Chris, we'll see you at a future GoBundance event. And by the way, public service announcement. If you're looking at GoBundance, we need you to reach right out to John Edwin. He will take great care of you. We have a VIP program. If you're inquiring, we'll put that in the show notes as well.
Yeah.
All right. We appreciate you so much, Chris. Thanks for being on the show.
Thanks, guys. Appreciate it.
Chris.
Damn straight. We just got
buddy.
We got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.